The Bank of England just increased and expanded their bailout. This comes despite the fact that this emergency bailout, this QE, unlimited QE, was supposed to be ending on October 14th. And even that was not ever supposed to happen because they were supposed to start quantitative tightening and selling assets off of their balance sheet. But before they ever got around to selling, there was a blow up about to happen with pension funds because the pension funds there had increased their leverage and used derivatives to increase their returns because there wasn't enough money coming in to pay what was going out. Add on top of that, the country's tax cuts without spending cuts, and now the implosion of corporate debt. It looks like the Bank of England may not be able to end this QE on October 14th like they said they would, especially considering they just expanded their QE to other debt. Ready? Let's dive in. Real quick word from today's sponsor, iTrustCapital. You guys know that I have used and recommended iTrustCapital for a very long time because you can invest in crypto using your IRA. And you can invest in gold and silver using your IRA. This means that whether you want to start up a new IRA and make new contributions to a traditional or a Roth, or whether you have money already in a retirement account that you want to roll over and use to buy gold, silver, or cryptocurrencies, you can do that safely, cheaply, and easily with iTrustCapital. And I'm serious when I say safely because they take security extremely seriously. They never take custody of your assets. They never borrow or lend against your assets. They never let their custody providers do either of those either. They also have an extremely straightforward pricing model. They do not have any monthly account fee. It's 1% for crypto, $50 for gold, and $250 for silver. Given the fact that cryptocurrency is in a severe bear market right now, many people are looking for ways to start buying the dip and getting in at the bottom here, but also people should be concerned about any tax implications that might come along with cryptocurrency gains later on should those assets be worth a lot more. Doing this within an IRA is the perfect way to shield yourself from those tax liabilities. If you do it with a Roth, any contributions that are made are taxed, which means any gains are not. In a traditional IRA, it is the exact opposite. And so IRAs are a fantastic strategy to avoid some of the tax implications you would have in a regular brokerage or regular crypto account. And because they have assets like physical gold and physical silver available as well, this gives many people the option to invest in these alternative forms of money that normally you would not be able to do in a regular IRA or your 401k at work. So I'm a huge fan of iTrustCapital, using it for crypto, gold, or silver with your retirement money. And if you use my link in the description below, I've got a little bonus waiting for you as well. The assets that these pension funds own started to fall in value, but because of the leverage that they were using and the derivatives, that meant that they were getting a margin call, meaning that they didn't have enough assets to support the price falling, so they were being forced to sell. But they're all invested in the same stuff. So when one person sells, that makes the price go down even further, which makes the next person have to sell. And it's this vicious cycle all the way down to zero and could result in the collapse of all of the pension funds. So the Bank of England stepped in and announced a $65 billion gilt buying scheme to stabilize the markets. But now those funds have to reduce risk by selling things like corporate bonds and other high yielding assets. So here's what's going on. I just got the new version of the iPhone. That means since that new iPhone is available, the last version of the iPhone started to go down in price. Let's just say a month ago, you could buy the old version for $1,000. Now, let's say you could buy it for $700 because something happened in the marketplace to cause the value of the existing one to go down. But let's say it was even more extreme than that. Let's say the new iPhone that Apple released was worth way more. It was way better, and still they released it for $1,000. That means the old one might now only sell for $400 or $200. Again, again, a market event causing the price of something to collapse because nobody wants that old one anymore. They want that new one. Now imagine there's a government or a bank or some third-party actor that's looking at that and saying, well, we don't want the price of old iPhones to collapse, so we are going to bail out the iPhone market. So here's how they do this to stabilize the iPhone market. They offer to buy iPhones for $800. Now pause with me for a second and back up. Do you think that if the government or the Federal Reserve or somebody offering to buy iPhones at $800 when they had fallen to $200, do you think that would stop people from selling iPhones or encourage people to sell those old iPhones? If you knew that I could sell it on eBay for $200, I could sell it on Craigslist for $200, or I could sell it to the Fed for $800, and it might not last forever, do you think this would encourage people to sell their iPhone or discourage? 100% it would encourage people to sell their iPhone to that buyer who is buying it at a price that is way higher than what the market would be offering or what the market could offer. The same exact thing happens with investments and debt. When a central bank steps in to bail out the market, they are printing money to buy that asset at a higher price than what the market would be paying for it. Therefore, not only does it prop up the price, but it encourages other actors to sell because they know they're selling at a price higher than what it's actually worth. Take a look at this picture. This is a man, his name was John Law. John Law started the central bank in France about 300 years ago. He convinced everybody to turn in their gold and silver, and he issued paper money instead. Again, this was about 300 years ago. And he also backed up that paper money with land in the United States. The Mississippi Company. So shares of the Mississippi Company and the gold and silver that he got everybody to turn in were the assets that backed up the paper currency that he issued. Now, he tried to spend a lot of money on different economic projects to boost economic activity, but ultimately this was doomed to fail from the start because just like every fiat currency, you can't print wealth into existence. You can only print money, and money measures wealth. Money isn't wealth. So he printed this money and started to see that the value of the money was going down. Well, he couldn't get any more gold and silver because he had already gotten it all, but there were still the shares of the Mississippi Company backing up the currency. So he printed paper money, used that to buy shares of the Mississippi Company, knowing that would drive up the value of the shares of the Mississippi Company, which would then support the value of the currency, right? What could go wrong? Except that people started to clue in and realize that, hey, I can sell an unlimited amount of these shares, and there's somebody who can print money and is buying them at a price above what the market would be pricing in that, and the price can't fall no matter how many I sell. I'm going to sell all of them, obviously resulting in the Mississippi bubble and the collapse of the currency, the collapse of the Mississippi Company as well, and he got run out of town. Well, it looks like that same thing is happening with the Bank of England right now, because while they are currently telling pension funds that they have 3 days left to rebalance, and its emergency support program for the country's fragile bond market will end. At the same time, the Bank of England has said now that it will have to buy up to £5 billion of inflation-linked debt per day. This is in an effort to stem the bond market collapse. And of course, right on cue, that means that the UK pension industry is calling on the Bank of England to please extend your emergency bond buying program past Friday. We just don't have enough time to fix our portfolios. This is why central planning is always doomed to fail, because you try and do one thing over here and save or rescue, bail out some part of the economy, and that always sows the seeds for another crisis that's by definition has to be at least a little bit bigger than the one before. So then now you've sowed the seeds for that next thing and you have to stamp down that thing, but that causes a problem over here. And like I've said before, this is like an infinite game of whack-a-mole where every single time you cut off the head of one dragon, 3 more rise in its place. Because every time you bail out failure, what you do is you increase the risk or the chance of more failure happening in the future that you then have to squash to get rid of the moral hazard. But then when you squash to get rid of the moral hazard, now you're also eliminating profit opportunities that causes a further need for a bailout over here down the road. And you get into the place where you're both supporting and squashing every single aspect of the economy, also known as full totalitarian control. But we'll see on October 14th whether the Bank of England sticks to its word and takes back and stops that emergency bailout, or if they continue along with it, especially given the recent expansion, the extra $5 billion for bond buying, given the fact that this has spilled over into corporate debt as well. Whatever they do, you'll be the first to know. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.